You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. Welcome back to TWIFO. This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and indeed still is. This week, we're going to do a little bit different. It is our final episode here for 2018. So we're going to look back in the rearview mirror a bit. And what a year it has been on the broad spectrum of futures options products. Your equities, your indices, your ags, your metals, your energy. You name the area. It had something going on this year, and we'll break it all down in a little bit. Of course, you guys can join us, as always, every Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern, via the live stream, or get it on your podcast provider of choice after the fact. We don't judge. We just like having you guys tune in, send your questions, comments, all that good stuff. We do like to hear from you guys. And joining me on the old program today for one final time in 2018, starting off around the horn, we go to my old friend, my compatriot since the dark early days of this program, Mr. Nick Howard. Nick, welcome back to TWIFO, sir. How are the holidays treating you, sir?
Hey, I'm pleased they're over. How about that?
Not quite. You got one more to go. Not one more to go, but
this one doesn't involve presents
that's
or
true.
parties.
That's true.
Or there's parties still, but it's. I'm glad this over. It's good. It'd be good. It's good to have it over.
And I'm also joined, you probably hear that voice, in studio yet again. He's been traveling the globe since the last time you sat down here with us, but I'm pleased to be joined once more in studio here by Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to TWIFO. Sorry, are your wings tired? Because you've been flying around the globe since the last time I saw you.
Feeling much better, and it's good to be back back home. Long time away from home, but good to be here. Thanks for having me.
Let's get to that really quickly before we dive into kind of our year in review, because you've been traveling primarily in Asia. This is an interesting time to be in Asia right now. There's a lot of industry conferences over there, FIA and others, that really deal with what's going on in the financial realm when it comes to Asia, opening to new markets, opening to new products, or maybe the lack thereof. I'm curious, you kind of did the tour. You did Singapore, you did Hong Kong, you did a bunch of other areas. What was your takeaway? What was some of the consensus? What did you learn from these events all overseas, sir?
Well, quickly we'll start with Singapore. I attended the Futures Industry Association's conference, of which they have historically, at least for the last few conferences, been really focused on the opening of China and China opening up and being able to create product and trade in and out of China. And they actually had the strategy of this conference to change the content around quite a bit and talk about globalization, some of what's happening with Brexit, and some other international themes. And I have to say, every panel reverted back to the opening of China. It was the theme of the conference, and they tried really hard to not have it.
It's kind of the 800-pound gorilla over there, isn't it?
Exactly.
Singapore does a lot. Obviously, Japan, other areas. The Kospi trades a lot in Korea. We see a lot of other products trade out there, but everyone's waiting for that moment when they flip the switch in China, so to speak, right? And I know from an options perspective, we've all been waiting for that for a while. They kind of got close to the dance a few years ago, then they backed off, and they kind of punted a little bit. We heard a lot of talk that the government over there was very leery. There is a much more, shall we say, speculative culture over there when it comes to things like wagering and stuff over there in China. So I think the government, we've heard from many sources, was very concerned that would spill over into the options market as well, and they would take advantage of the leverage. So we heard a lot of stories about them talking about extreme measures, like very large 10,000x multipliers and things, so that no retail could afford to even do a one lot. So it was only for institutions. They've since backed off that, but as a result, they've kind of been slow to open the kimono, to mix all my metaphors, and to really kind of get the ball. We have some products going over there, some index options going over there in China, but not a lot yet. I think we're all hoping for a little bit more so we can get engaged with that large population. Right now, still has to jump through a lot of hoops to trade these products over here. Any other interesting takeaways, sir, from your whirlwind tour of Asia? I know you even met up with our friend from TD Ameritrade, who was on the show with you last time. Yeah, you guys were both overseas in Asia. So yeah, the TWIFO crew travels together around the world. Any other interesting takeaways, sir, from your whirlwind tour here?
Yes, following Singapore, I spent a week in Hong Kong. The CBOE Global holds their risk management conference there in Asia, in Hong Kong, and it was a fantastic conference. As they started off with a really good, strong educational start to the conference, but then quickly dove into, as we love to talk about, harvesting volatility. And I have to say, it wasn't so much about writing options and harvesting vol. It was more about protection to the downside because of the volatile markets and how that skew that I think we talked about the last time I was here,
yes.
how
Yes.
SPX and RUT were both, or should I say RVX and VIX, were really in line, and now we've got volatility back, and the Russell 2000 has really been an incredibly volatile index.
It has been. And we're going to get into all that, obviously, in a little bit, looking back on the year. But you're right, it's kind of hard to get out there and start talking about, harvesting the old risk premium again when things are just exploding in your face, and all of a sudden the 5% out of the money puts that you were looking to harvest are now 5% in the money puts,
Exactly.
And it's a different game. We saw that a couple of years ago at that conference as well, when we saw some big shocks, and all of a sudden everyone was scrambling to change their presentations because the risk appetite for harvesting had kind of gone away a little bit. I think we're seeing a little bit of that now, even though levels are high and they are attractive for those things, but still, these are interesting times, shall we? So I'm glad you could do the whirlwind tour for us, Mr. Sean, keeping us abreast of all the goings on overseas when it comes to all things options, indeed. Let's kick it off. It's been a crazy year. It's been a tumultuous year. I'll let you. We have an order here, but we don't have to go in that order. I'll let you guys pick. Do you have a particular product category you guys want to start? Maybe Mr. Nick, 'cause I had Sean do his whirlwind. I'll let you pick, Mr. Nick. Where do you want to start looking back in the rearview mirror for 2018, sir?
Well, are we going to do some? We're going to do some fun end of year stuff too, right?
Yeah, that's what I'm talking about. We're doing that right now. We're looking back at 2018.
I mean, we're going to do some. We're going to do extra questions too.
Sure, we can do. Yeah, we'll do that too. We'll do all of it.
Okay. I guess. I mean, rearview mirror. I think the slipperiest slope we were on is the crude oil, right? So maybe we should just kind of take a look and see what things have done. From.
Let's do that.
Jan 1 all the way to here.
I was kind of
a good start.
I was trying to break down different themes for different product complexes through the year, and I kind of had two in mind for the energy complex. They were kind of dueling themes, of, I guess, narratives for the year, if you want. Obviously, the one big one you kind of just alluded to is kind of the rise and then fall again of crude. We saw in the beginning of the year, everyone's like, oh, crude is back. WTI back in the 70 handle. Oh, all is right with the world. Dogs and cats living together. Everyone's happy. And then that didn't last too long, right? Because OPEC can't get their act together to save their lives. They're talking about cuts. They're trying to get cuts implemented. No one really buys into these cuts. And so as a result, we see crude threatening the 40 handle yet again, in just a span of probably the most rapid sell-off, certainly in recent crude history. I'll have to go back and crunch all the numbers to see if it's historically where that falls into place. But in recent history for crude, this is certainly one of the more rapid evacuations to the downside, shall we say. We saw big sell-offs obviously back a few years ago, but that took a lot longer to go from the 70 handle to threatening the 40 handle than we did this time. As we're doing showtime here, listeners, right in the middle of that range, right around 44 and a half here on WTI, off net another one handle for the week. The second theme I kept coming back to, Nick, was I guess you can call it Nat Gas's revenge, rise of Nat Gas, call it what you will, but it was, I hate to use this cliche because it is a cliche, but there was pretty much a black swan upside move in Nat Gas this year. Obviously, that's a much more recent development. Which of those do you think really should be our theme of the year for energy, or do you want to split it? You want to be mealy-mouthed and go down the middle, sir?
Well, if you're really looking for the black swan, I mean, the Nat Gas move probably ruined a lot more people than I think the oil was tradable. People got hurt, but I don't think anybody got hurt as bad as the people did in the Nat Gas.
Yeah, it was
move,
not as unforeseen, that's for sure.
Yeah, so that might be a good starting point there. In general, do you want me to take the lead on that one? I mean, more than anything else, it's funny. Sean hasn't been on in a while, and we always talk about getting options when you need them, right?
Yeah.
So it's always buy puts when you can buy them, not when you need them. And obviously, it was a similar situation, but on the upside for the Nat Gas. But I think the takeaway from that was from my standpoint, which is typical of vol. If you had a bottomless supply of funds for margin, you probably could have weathered that storm, right? But because you got an opportunity in the next 24 to 48 hours to try to cover where the big problems were. But I mean, that one, I don't know if we'll see something like that again, or the move itself probably was probably very doable, but the result with the one guy who did who was trading power of attorney accounts, that I don't know. You keep thinking that that's going to be the last one that we see of stupidity, but people keep surprising us with the amount of stupidity that's out there.
There's a lot of stupidity. I'm looking here right now as we're talking also on the energy side. Also looking at crude, obviously it was just a tumultuous year. It was, looking at the Jan contract here. But you can do the similar analysis for any contract out there. Starting the year right around, looks like 56, 57 or so. And then getting as high, obviously, not too long ago, back in October, hitting 75, 95, almost 76. And then the second part of this graph is almost a straight cliff right back down. This has been one of the more impressive sell-offs in recent memory here in crude oil. And these futures are reflecting that. We're seeing the vol this week up yet again as people are still kind of hand-wringing over what's going on out there in crude land. Nat Gas is slowly, not quite returning to normal yet, I wouldn't say, but that move can only happen so many times, right? So the massive explosion of vol and everything else we saw as we broke through myriad handles to the upside is not a kind of thing that hopefully we would see again anytime soon. But yeah, that has been just a fascinating area to watch. We could do the whole show on just these two segments. I kind of want to hit on themes and we'll kind of keep rolling, and then maybe we can get back to some questions as well. Sean, let's get to your neck of the woods here next as well, because we just talked a lot of equities on option block, but equities have been just I think tumultuous. We were debating on our last show what kind of the theme of the year has been for equities, but I think it kind of really boils down to one thing. It's kind of the return of vol. Would you concur with that, sir, as a 2018, I guess, theme of the year for the equities land?
Absolutely. Return of volatility. It's been unbelievable, these swings. I don't call the market, but they've just been really dramatic swings. And, of course, the Russell 2000 had a banner start to 2018 and was outperforming every index out there. And then I think it outperformed them all as it broke as well.
Yes, outperformed to the downside, as you like to say.
Yeah.
You're right. That's been one of, I think, my secondary surprise for this year. Has been kind of the performance of the Russell 2000. Opened the year right around 1550. And then in this recent, you're right, it was blowing the doors off everything to the upside as everything seemed very macro-driven. Trade war, everyone thought small caps relatively insulated from that. Not entirely, obviously, but relatively. And
tax benefits, and then another help
to the downside. We've seen Russell just outperforming to that side now too. Has that been as surprising to you as it has been to me? I know a lot of our listeners as well, to see that small caps getting caught up in this as much as they have. Because you're right, the conventional prevailing wisdom going into the sell-off was we should see a muted sell-off in Russell because they're not as driven by the macro waves of trade wars. They don't really do a lot of exporting. They don't have a lot of currency risk. Government shutdown hits everybody, but that's kind of a weird thing. But outside of that, are you surprised that we're seeing Russell kind of doing what it has been in the latter part of the year here?
Just based historically on, and I'll let you and Nick talk about this at a deeper level, but as we know, historically the skew to the downside and the Russell 2000 is steeper, right? And that's for a reason. The index is more volatile. So I think that this all just got caught into this entire market dynamic of the time. And the swings have just been exacerbated by that. But again, I think that skew, historical skew, is for a reason, and we're seeing market moves that now kind of show the reason why. Certainly
justifying there. Yeah, I know some people who were telling me they were shorting the Russell and they're expecting it to sell off. And I remember thinking, that seems a bit extreme given what most of the headwinds in the marketplace are. And then fast forward a few months and it turns out they were looking pretty good. We hit 1550 as the open for the year in the Russell. And then hit on the big sell-off just recently on the Christmas Eve sell-off. We saw it hit as low as 1267. That was down 18.2%. And then coming in after the rebound yesterday and a little bit more sell-off today, it's down about 15.5% or so for the year, which I think would have surprised a lot of people if you had told. Not the fact that it's off, but it's off more than the other indices. The Dow off about was off about 12% after the rebound yesterday, 7.5%. I don't have updated numbers for this morning, but we're selling off aggressively again, so it's probably somewhere in the 9% range. S&P, same thing, down about 12% after the big historic rally yesterday, where you got only off about 7.5%. Now again, after today's move, probably somewhere around 9% as well. We've also seen that kind of volatility spread, Mr. Sean, kind of widen out a bit as well, or I shouldn't say narrow actually, as we've seen VIX kind of moving around all over the place, and RVX kind of moving aggressively as well. Not usually moving as much as VIX, but VIX seems to kind of be the one that tightens the spread. Last week it was VIX is about 4 points higher than it was a week ago. RVX about 2.5 points higher. That spread is right around 1.5 now, which is actually really tight, which is kind of interesting. I know you were just doing the volatility rounds in Asia. I don't want to spoil it too much because we have a listener question about this, but were there any people out there maybe tapping you on the shoulder saying, "Hey, what's up with RVX?"
I'm always asked about RVX.
Good, I like to hear that.
Always asked about
that's
RVX.
That's one of my babies out there. I like. If you look up RVX, I think to this day, our VolView show is one of the only ones that talked about it back in the day. So I'm glad to hear that it's getting a lot of love. We also talked last week about our buddy Russell, not Russell 2000, but Russell Rhodes at Tab Group. I'm not sure if you saw this. He did an interesting breakdown of writing some calls on the Russell 2000 going into the Fed announcement and kind of how it played out. It was an interesting breakdown. We actually ran it down the show. Check it out if you haven't already, listeners. It's called Using Options on Futures with Elevated Volatility to Trade the FOMC Announcement. But it's not rates. It was using the Russell 2000. He actually highlighted a pretty large trade, and it was in the Dees Russell 2000 options over there last week. Mr. Nick, are you on board with that theme of the year for equities being the return of volatility, sir?
Yeah, I mean, of course, we saw that, but I think one thing Sean probably can't talk about, we can talk about since we're not affiliated with anybody in particular, is I don't think we would have had a lot of the volatility if we didn't have a lot of stupid comments coming out of Washington either, right? Because the Fed pretty much showed their hand for the entirety of the year, saying we're going to do 3 this year, and they did 3, or whatever the number ended up being this year, and they followed suit, and they made order out of something that could have been held more closely to the vest, and then in their announcements post the FOMC meetings, made adjustments based on where the economy was going. But I think that when somebody who's uneducated says things, that caused a lot of the market turmoil, right? The tariffs caused the market turmoil. We probably wouldn't be as low as we are, and we wouldn't have seen the swings that we had if we didn't talk about the tariffs, which caused commodity price problems, which caused market price problems, and then when we were going in one direction, whether it be positive, when we were moving positively again in the stock market, somebody would say something stupid, and it would bring everything back down. And because we're moving back and forth on short time frames, we obviously get volatility. And so yeah, I think that's an easy one for the stock market, for the index futures market, but at the same time, I think that could have been avoided if we had somebody in office who had any common sense at all.
That's a theme we touched on our other show as well. And we don't want to get political. People are on both sides of the aisle, like to say all sorts of histrionic things. But the one thing everyone and their mother on our network was banking on when 2017 started, when we swore in a new administration, everyone to a person on our network was saying, the one thing you can count on with Trump is that he won't be a single-digit VIX president. And that is exactly what we saw for the entirety of 2017. We saw a very calm pace. Wasn't the tweet storm frenzy that moved the market, at least. We saw markets rallying. Volatility hit not quite, actually pretty close to historic lows there when we got into the single digits for a while there. So volatility went away. The whole question of 2017 was, where did the vol go? The second question was we thought one thing we could count on with this administration was more volatility. I think in 2018, we got the administration that people were expecting in 2017, where they were a little bit more forward in terms of, shall we say, in terms of tweeting more aggressively. Things like the trade war, you're right, were exacerbated. Things like the market shutdown that we're seeing right now, all these things kind of coming out of the administration, and kind of both sides of the aisle playing fun with this one, at least the shutdown. But you're right, that has been a second narrative of the marketplace this year, is that we've seen the return, or maybe the dawn of the administration a lot of people had expected in 2017, but we didn't get for that first year. Maybe we'll see what we get in 2019, if more of this or if we get more of a return of the 2017. We shall wait and see. As we're talking trade war, I'd be remiss if we didn't at least touch on ags. Talked a lot on ags on the show this year. They were kind of ground zero for the trade war, particularly soybeans. If you looked at any kind of numbers, this is where it all really hit the fan in terms of the trade war. Obviously, one of our largest exports to China are soybeans. China's cracking down on that. In fact, this November, for the first time in quite some time, we've seen 0 soybeans exported to China for the first time in quite some time. In fact, that's why they're making it all up effectively with Brazilian imports right now. Not a good news for domestic farmers here. We're hoping that, those things kind of balance out. As we're looking right now, the beans are off about 20 handles on the week, right around the 880 handle. That puts them on pace for somewhere around 8% sell-off for the year. We're back below that 900 level that we had talked about for a while. Of course, they sold off aggressively. They were north of 1,000 when we started talking about them earlier this year. So it's been kind of crazy. Mr. Nick, we had a good chance to talk a lot of ags this year on the show. Any lasting, are you on board with that theme? It's kind of just, I guess the theme would be that the trade war kind of annihilated beans. Are you on board with that being the kind of ag takeaway for 2018?
Yeah, I think from a price standpoint, I don't think that we saw the same kind of you recall when we had the bad weather down in South America, probably was that got to be 18 months ago? That had to be early on in the show, right? I think we saw a more whacked out vol curves at the time with that than we did with this, right? We never saw quite the disparity between, the upside and the downside from a volatility standpoint that we saw back then. So yeah, the trade war that got us a little bit beat up with the bean prices. But with all that said, we've seen things crazier from a volatility standpoint at other times because it really we didn't give it the same attention because we didn't see the same sort of whacked out looking charts that we did a while back.
Yeah, I think whacked out is good. It's good if you got to sum up the year for 2018. Maybe whacked out is not a bad technical term to throw around out there. I like that. We got to hit on your other favorite category, Mr. Nick. Before I'm gonna get some. You're right. I want to get some listeners here on our year-end show as well. Do a little bit of extended listener love. But I was trying to hit on a theme, Nick, for gold. And the one I kept coming back to over and over again is that gold vol is kind of just It's kind of just in the dumps. And how many times have we talked about? It's been over a year now. We've been talking about, is this the moment? Is this the moment? I mean, Blue's been on here. Eric's been on here with their research on gold vol, talking about how it can't catch a bid. It's one of these things. Is this the moment? I mean, gold's been moving. We saw a little bit of moves, particularly lately, as we saw this big sell-off here. Let's see how we're looking on the metals. By the way, listeners, cmegroup.com/TWIFO is a place to go to check out some of these reports for yourself. Do that. Click on the drop down for metals. Click on gold. You'll see exactly what I'm looking at here right now. We're at 1280 coming into showtime here, up about 20 handles on the week. So again, this flight to quality kind of continuing as the equities are selling off. We're seeing people moving into gold. That's kind of the way it's supposed to work. But gold vol up a little bit this week, Nick. But how many times have we said this? Oh, it's getting a bid, and then it comes right back in, right? So my narrative, I'm curious if you agree or disagree with this. My narrative for the metals was gold vol is kind of just stuck in a rut. I don't know. You agree with that?
I'd say to some extent, yeah. I mean, I'm looking back. We have this new report that we just released called the DTE report. And what you can do is you can bring up any trading contract. So, for instance, March gold has 61 days to expiration, but I can look back all the way to 2009 and see where the March contract was trading from a volatility standpoint with that many days to expiration. So in the big scheme of things, yeah, volatility is pretty low. It's not nearly as horrible as it was last year at this time. We were trading under 9% last year at this time, and the futures were around the same place. So I think a lot of what's happened in terms of us coming from a low point in the futures and also the context of the situation, right? I think we got a bid based on the fact that the market was we were swinging around and there finally was some sort of store of value. We saw a flight to quality in the treasuries as well. We saw more of a rally and that kind of stuff. So yes, it's low if you go back and look at 17, 16, 15, 14, all the way to 13, actually 12, like we're across the board. 13 is the one that we're we tie in most closely. It's about the same volatility, but yeah, long-term, last 10 years, Gold vol still really low. Great opportunity was back last year at this time, and we talked about it a lot based on the fact that we were sort of where we were trading. But I think we're seeing, we talked last week as well about the range starting to seeing if we can get to the higher end of the trading range. So yeah, gold vol is still low historically. Overall, over the last 10 years, not so low in comparison to last year, but still low and probably still some room to move on the upside if we continue to get these, because we're getting some decent moves intraday, I think.
Yeah, like you say, it pays the rent sometimes, even though it's cheap and it's low. And that's actually cheap rent is what you want, right? So it's not terrible that gold vol can't catch it, but you just have to know how to play it. And so that's a conversation we've had many times on the show. I'm sure we'll have again in 2019. Meanwhile, though, I want to make sure you guys get to be part of the conversation with a little bit of your extended futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment. Time for your feedback. We're going to squeeze in a bunch of you, make you all happy because you all write in. By the way, if you want more products to review for year-end 2018 complexes, we can't squeeze all of them in. But if you have a suggestion for that, maybe we'll squeeze one in early 2019 just for you. We want to get to your questions here. Let's start with Jamal A. that's a long handle there. Jamal A. I like that. They want to know, what are our thoughts on the chances of Bitcoin options listing in 2019? I haven't had this question in a while. Maybe that says something in and of itself. But this was on everyone's lips about a year ago, starting into 2019, or 2018, I should say, with what's coming. We saw the futures. Everyone raced to list the futures. CME and CBOE both racing neck and neck to list Bitcoin future. We talked recently about how CME's kind of run away with that game. They've had volume records just about every quarter, and probably for Q4 maybe as well, as you've seen Bitcoin kind of surge back above 4,000, then couldn't really sustain it and drop back below it again. It's been interesting trading out there of late. But yeah, the chances of Bitcoin, well, selfishly, I'm going to hope that they do, because we're launching a new crypto trading show next week, actually. So stay tuned for that on the network here, listeners. But I thought for sure we'd see one in Q2, Q3 of 2018. I was surprised to see that we didn't. I think it's the next logical step. The big major holders keep saying they want to see larger pools of liquidity around their futures first. I think there's maybe some regulatory pushback too, which is why they haven't done that. But I think we will see those in sometime. I'm not going to go out on a limb and on this one and give a time frame, but like I did last year, I said Q2, and that was not correct. But I think we will see them in 2019. Nick, are you on board with that? You think we're not going to see them anytime next year, I should say?
I don't know. I'm not sure. I mean, and again, I try to listen as much as I can to see if I get any rumblings. Things are pretty close to the vest at all the places that I listen, so I don't necessarily get any insight. But I would think that I would be more, well, first of all, one thing you touched on was the fact that, CME's probably won in terms of the Bitcoin futures. Now, the next thing, what I would think would be next before the options would be a CME version of a single coin, or even being able to trade coins smaller than, trade partials on the cryptos, because I think that 5-coin contract is still too much for the regular Joe, and the 1-coin one is probably good as a retail starting point. But what would be even better, and what would really, I think, get the volume pumping up is even smaller versions of that future. So I would say we're more apt to see derivatives of the derivative of future type contracts before we see the options. But I think people were still waiting. As much as if you go back and look at how the crypto's been trading, it's a much more narrow range, and I think that's what a lot of the places we're waiting for, is to get a more reasonable price range, so you would get decent markets. They'd be fairly tight. You could trade on them instead of these big, nasty, wide markets and people getting run over. So I don't know. I think that because we've well waited a year and because people have expected it last year, that we might see it. But my guess would be you see future stuff first before you see options. But we'll see. Who knows? I mean, we're ready to go whenever they offer them.
Quick Strike is ready to pull the trigger. You're right. That is what I'm hearing from the CME and others as well, that they do want to list, let's say an Ether or Ripple or whatever. Take your other coin as well, underlyings. But hopefully once they do all that, we will maybe towards the end of the year finally see some big. One thing about the multiplier, Nick, is that the price level has helped with that. So now the 5x coin costs pretty much what in terms of multipliers what one did back in the day, right? One coin contract would have cost. So that has helped alleviate that problem somewhat. And I know, Sean, you guys at Russell have been looking at kind of Bitcoin and crypto from a little bit different trajectory in terms of not the options so much, but kind of maybe indexing. Is there still a lot of interest in that over there? What's kind of your takeaway on crypto here from 2018 leading into 2019?
We're still evaluating the space. We're looking at the various makeups of various cryptocurrencies to see where we could add value there on the index space. So yeah, we continue to. We're continuing to look at that, but
it does seem like there's opportunities there. I mean, there's a lot of different versions out there. I think no one's really cracked it yet, right, in terms of the perfect index for crypto. So I'm kind of curious to see what you guys come up. Maybe you break some news here next time you're on. The new crypto index coming from FTSE. I'm just giving you all kinds of homework every time you come on the show, Sean. You're gonna run fleeing around the world again before your next appearance on here. All right, we got questions here. Next one from these are fun to pronounce ones. Shasha3. Not one or two, but three. They want to know, what's our biggest surprise of 2018, and also do we have any crazy predictions, or actually crazy expectations for next year? My craziest one's going to come tomorrow. Tune into Vol Views tomorrow. I'll have to do my prediction for volatility for the end of next year. So stay tuned for that. I'm going to table that one until then. I'm on the hook for that tomorrow, so I won't give it away here today. Maybe I'll do another one too. We hit 5 billion overall contracts in the options market for this year, 2018. I'm going to go out there and say I don't think we'll hit that again next year. That was driven by a lot of big macro currents that could persist and that could be proven wrong, but I think we'll maybe come in under that level for 2019. Just going out there on a limb. Biggest surprise. Well, I'll let you guys go first before I chime in. I don't want to color any. Maybe Nick, we'll start with you. We just talked about a lot of crazy trends and things of 2018. If you have your biggest surprise of 2018, what would it be, sir?
I'm going to make a little bit of an educated guess just based on looking at some tools that are out there, but I'll say that we'll see maybe one more interest rate tightening for the year. That's it. They talked about 4 originally, then 2 of late, and I'm say we get 1 or less. Just if this market continues to go bonkers like it is, then there's really no need to keep going with that as a stand. So I'm going to say that would be my guess. I
like it. Out on a limb for that. What about looking back at last year? What's the biggest surprise for you that you saw last year?
Last year, the biggest surprise, I think, I don't know. I guess I thought, and this it might seem like a cop out a little bit. I didn't think we'd see the massive sell-off in crude at the end of the quarter here like we did. I just thought that it didn't make any sense for it to go down. We talked about it a lot, right? It just seemed like it was way overdone, especially given where prices need to be in some of the foreign countries in order for things to be good for them. I just thought that was a kind of a surprise to me.
Sean, same question for you, sir. If you had a biggest surprise of 20, we just talked about one before. I certainly would put it up there. I don't know if it's my top, but I would certainly put it up there. The degree of the sell-off in Russell has been a surprise to me. Is that your biggest surprise of the year, or is it something else?
I'd say just the range of the market swings has been just massive, much beyond my expectations this year. But I got to say, across all asset classes, it's been incredible ranges in probably every asset class that trades. I don't think one has missed a wider range in 2018 than any other.
Do you have any weird, not predictions, but expectations for 2019, maybe volume-wise, or anything really that you're looking towards for the next year, sir?
I see volume growing. I see open interest growing. Everybody continues to invest in the market. I don't think that's going to change. But I do feel that there's some tremendous upside in the futures market for the equity suite, most particularly obviously the Russell suite of product. I think is actually, I'm very bullish on volume and open interest there. So as the CME continues to distribute that product, it's going to continue to grow globally. I also think the CBOE's options are ripe for some tremendous upside growth as well. CBOE is doing a lot of work there to get those products up and going.
Since we're talking about the work everyone's doing out there, I got another one for you here, Sean. So stay with me, sir. We talked about this, touched on it a little bit earlier, but Tarles wants to know specifically: are there any concrete plans to bring back our old friend RVX? Obviously, that's the volatility of the Russell 2000. In 2019, he says it seems like market makers would be interested in more volatility offerings these days. You just did the rounds of the volatility circuits, sir. You probably talked to a lot of liquidity providers. Is that the feedback you're getting? Are they looking for, I mean, there's a lot of vol out there. Do they want more ways to play it? In which case, something like RVX might be a good option. Pun intended.
No pun intended. RVX, the index is still out there. They calculate it, so you can always check out RVX volatility on the CBOE's website. The futures contract is probably more his question in providing liquidity in the futures contract. Pick up that phone, call Rick Rosenthal at CBOE and force that client demand on him. Because that's what market makers are looking for. It's for customers to trade with them. So the more client demand there is, the stronger will be the force behind RVX.
So it sounds like get the futures liquidity moving a bit more, and then they'll probably open up. Because I'm assuming he's writing to us. I'm assuming he's asking about options. He doesn't say it specifically in the thing, but I think we'd all like to see more options out
Absolutely.
there. Absolutely. It's more fun. I mean, we talk about this spread every week. You could do it in the listed options now, but it's hard. And there's a lot to do through. If you had a dedicated product to helping you do that, that would certainly be an interesting way. Good question. So yeah, Mr. Tarles and Mrs. Tarles here. Hit them up. Tell them you want to see, or maybe start. That's probably the best thing to do. Start trading them, and then you will. You'll get a response that you'll like in 2019. All right, let's see. Let's keep rolling. See how many we can squeeze on here. C Tauck wants to know: is this market whipsaw enough to make people rethink purely passive investing? Maybe they will consider an active allocation or perhaps even hedging themselves in 2019. Well, I'd like to see the latter, obviously. We obviously talk a lot about active on this network and on this show because that's kind of what we like to do and what we look at. And we think everyone out there, if you just act passively investing, you're riding the market up. And right now, guess what you're doing? You're riding it right back down. Hopefully you have some stopgaps in place along the way to be able to mitigate at least the downside of that. I guess, Sean, this one's for you, I guess, as well, because you guys do a lot, I know, a lot of data on how much is benchmarked to active versus passive and all that stuff. You think this, as he puts it, this recent whipsaw is enough to maybe start bucking that trend a little bit in equities land?
It's a great question, and time will tell. But as these markets continue to be volatile, you're going to see more activity. So I also think that money finds its way into the market, and fund managers figure out the best way to make that investment. And active funds will be active, and passive funds will remain passive. But I do think the volatility is creating more of a decision when to get into that market.
That it is. All right, let's keep on rolling. Here's a good one for us. Oh, Nick, before we do that, let's give you a chance. Do you want to, let's see, what were their names again? The Whipsaws from C Tauck. Yeah, let's go with that one. What are your thoughts, Nick, on, we've seen a lot of interest in the passive stuff. We obviously lean more towards the active here. You think this will maybe wake some folks up?
Well, I think that that's a two-part thing, right? So because I think some of this stuff, some of the market's overdone, you're seeing a lot of companies' share prices, which are much lower than they probably should be based on earnings and based on situations. A lot of the China stocks got the crap beat out of them, and they have enormously successful earnings records over extended periods of time, and their forward earnings still look good. You get a lot of staple stocks and stuff like that are beat up, 10, 15%, 20, 25% cheaper than they should be, that are going to be good. So, passive investing to me is, finding deals and investing in that and putting that money in there and letting it sit and sort of riding out some of this, back and forth. Because when you look at this last month over a long period of time, you're not going to really see, the back and forth. You're going to see either an opportunity where you missed to get in on stuff that got hammered. And so that's kind of one vein of investing. And then the other one is, I think it's two different mindsets. You can be a passive investor, and you could also be an active investor, right? So one portfolio does something where you're valuing, and the other one is taking advantage of the market volatility. So I don't think it changes much.
All right, let's see. Next up on our listener palooza here, we've got, we're going from very broad questions to technical questions. B-Boy 2 wants to know, what is the technical definition of a skew trade? Well, that's kind of a subjective question, Mr. B-Boy. I think the technical, if you look up in a options book and you look up skew trade, they're probably going to show you the old 50 delta risk reversal. So 25 delta out of the money call, 25 delta out of the money put. That's what they look at actually in Quick Strike to measure the skew. There's other ones they have too, but that's usually the barometer people have when they're measuring the skew. They're measuring the volatility level of the 25 delta put and the volatility level of the 25 delta call. So they add up together to a 50 delta risk reversal, and that's what people look at usually when they're judging skew. So that's probably, if there's a technical skew trade, that's probably it. But anything that really trades along that kind of option chain with a big broad breadth, like let's say verticals, for example. You buy let's say an at the money vertical, you sell a far out of the money call or puts, or anything that's trading a broad width along, or I should say breadth along that option chain in the same month, is a skew trade. People don't think of it that way, but they are. So long verticals and things like that, broad, wide verticals also take advantage of that. So it's something to think about. A lot more trades, I think, Mr. Nick, than people really assume. They don't think of a vertical as being a big skew trade, but it is, clearly. So I think, that people get hung up on just that risk reversal. But obviously, Nick, when they're thinking about skew trades, they probably should look a little broader. Wouldn't you concur?
I think you said it right. The typical, when we talk about the skew, we're doing that 25 delta or 50 delta total. But that's just a way to relate, to get an idea of what the vol curve looks like. But you do skew trades all the time. You buy a put spread, that's an at the money put spread, and selling out of the money. That could be a skew trade. Same thing on the call side. You can do a skew trade with out of the monies by doing a 1x2, right? You think something's out of whack or something's a little bit too bid or a little bit too offered. So skew, to me, is when relative volatility values between strikes looks like it's out of whack. It doesn't necessarily have to adhere to, a certain distance away from the at the money, although that's a general market discussion point. Skew can be any time you're taking advantage of a difference in volatility along the vol curve, or even as a calendar.
All right, Mr. I think we have time for about one more here. I'll let you pick if there's one that really resonates with you. We got a two-parter here, too. That's kind of epic. I guess we can tackle that one if you're really inclined. Which one resonates with you, Nick, for our final listener question of 2018?
Oh, I got to look at the show notes.
I can pick if you want. I was just trying to let you.
Let me see. I got them up. I just had them on the browser.
We've done a bunch of them.
Oh, well, we could do the question from Burns is always one of my favorite ways to respond there, right?
Let's go for it. I'll even let you read it. How about that for our final listener question of 2018, sir? Go for it.
Question from Burns, or is it Burn S, or is it B Earns? That was my play on you saying the name multiple ways, because you never know which way.
You do never know.
You should say. Or BU RNS. So question from Burns, is buying a call actually the best way to get long stock in this market? Now, that might be the worst way to get long stock in this market, to be perfectly honest with you. I think given that we're testing new lows all the time, if you like something, I think a good way of potentially getting long the stock market, I say potentially because it may or may not happen for you, is finding puts around where the stock is trading and selling those, because then what you're doing is collecting premium. And if you like it at that price and it goes lower where you actually get assigned, then you own the stock at a much better price. So I think I like selling puts to get long stock in this market myself is a pretty good strategy.
Mr. Sean, any thoughts on this one here for Mr. Burns, or B. Earns as Nick said?
I gotta say, Nick, I was gonna say the exact same thing. Just pick your point of entry in the stock and sell the put right there. And you harvest the premium.
It all comes back to that.
It all comes back to harvesting that premium. And if it gets through your strike, you're gonna go long. So. It's probably a fantastic way to get long the stock market.
Yeah, that certainly is an attractive way. Obviously, if that concerns you, you can always do verticals as well, put spreads instead of just straight up puts. If you're scared about crazy levels happening, which we have seen crazy things happen this week, it's not out of the realm of possibility. And you're right, Nick. Long calls has been getting beat up. Of course, long term that could work if you like maybe like a stock replacement type thing. That long call is a better way to go than just getting long the stock. You can also do verticals there if you're concerned about that. But yeah, the short put certainly work. You can combo risk reversals. That all works as well too. So a lot of ways you could go. Buying call is kind of the most basic, and also right now not exactly doing too well there.
And buying a call, the only risk you have is the premium you're paying for it. So.
Exactly. So if you're looking at stock replacement, it kind of mitigates your outlay. I like it more as a stock replacement play, a little bit longer term, a little bit meatier call if you're going to do it rather than, I'm assuming he doesn't say, or maybe she, I'm assuming they're thinking, well, I just want to go buy a cheap out of the money call, right, and take a flyer. Not a huge fan of that, but if you're doing like some sort of like you have a nice name where you've analyzed quite a bit, you like your levels, you can get in with a long put certainly, or you could use it if you already have it. Maybe you swap it out for some stock replacement, and then you're getting more of the capital efficiency we talked about before. You get all the Greeks worked for you. Your outlay is mitigated, which is kind of nice. Your risk is mitigated. So there's a lot of things you could do with that. We could spend a whole show talking about this stuff as well, listeners. But unfortunately, whenever that kicks in, there it is. There it is. Unfortunately, that music means we've come to the end of our epic 2018 year in review. We try to squeeze in as much as we can, much of you guys as we can on the show. We never get to all the questions. We never get to all the products. If you have one we missed, you'd like to see us hit on the show, or maybe you have a question, you want to get it in for the new year here of TWIFO, which will be next week, because it just seems like so distant, but it's only next week. Hit us up. You know how to find us at Options on all the major social media platforms, or questions at theoptionsinsider.com, or in the live chat. Or even hit up Nick, and he'll forward it to us over there at Quick Strike One. However you want to do it. Send in your questions. We love to hear from you. But yeah, that's going to be a wrap for TWIFO for 2018. We've enjoyed bringing you the show. Before we sign off, though, let's go back around the horn. Let's see what each of us has in store for you in the coming year. Let's start with you, Sean. You get pride of place because you're right here, right next to me, enjoying those delicious steaks from Gibson's. What's cooking from the FTSE Russell Index team in 2019, sir?
Look for more product. Look for more size trading in the market. Look for increased volume in Russell suite of products. It's a trajectory. If you just look at the volume and open interest numbers within the CME Group, it's just heading north. So I see that continuing. More global expansion of product, and I'm going to be traveling some more. Throw that in there.
I was just going to say, hopefully they tamp down your traveling so you could come in here and sit next to us every week. We like having you in here in person, but we could beam you in from hither and yon if we have to as well.
Absolutely.
But I guess that's a good sign, right? There's global demand for Russell. Upside, downside, they don't care. They're still trading it, right? So that's kind of a nice thing. Check them out. If they want to learn more about what you guys are doing, Sean, where should they go? What should they do?
S. Smith at FTSERussell.com.
There you go. Hit the man up. He'll answer your questions about RBX.
Happy to talk to you.
Directly. So you stop sending them to me. You can send them straight to the horse's mouth over there at Sean, and he can answer them directly for you. And Mr. Nick, same question for you. You mentioned you're ready to go on crypto. What else do you guys have in the hopper here for 2019, sir, over there in Quick Strike?
What else do we have? Well, I mean, we're a big push to make things just easier to use and quicker. And of course, there'll be new tools coming and probably making more of an effort to to let people know what's all available and how they could benefit from it. So I think that's what you'll see coming down the pike. Also, the big thing that happened, and we made a big push over the last quarter to speed things up, and we found some inefficiencies, and you can call them bugs. I'll call them inefficiencies, or things that are legacy things that didn't make much of a difference when we were covering 10 products, but when we were covering 300, it makes a little bit of a difference. But we've probably increased the speed of a normal page load 240% over the last month. So the experience of using QuickStrike has gotten that much better. And I'm actually that's probably the most exciting thing that's happened from my standpoint for 2018 is the fact that the user experience is just tremendous right now. So take a look if you get a chance. Even on the free tools, you'll notice just really, really lightning speed.
I was going to point that out. I'm looking at it right now. I've been clicking around throughout the show, and it does seem a lot faster. Not that it wasn't fast before, but it does seem, you're right. It just I'm getting to these TWIFO reports pretty quickly. Check it out for yourselves, listeners. You guys know where to go. Quickstrike.net or Bantix, that's BANTIX.com, to sign up for yourselves. And, of course, give them a follow over there on Twitter at QuickStrike1. No C, QUIKSTRIKE1. or on Twitter, I should say, to learn more. And of course, our friends over there at CME Group as well. You know how to find them, CMEgroup.com, for all that research, the Educational Institute, all the other stuff they have going on out there. Check them out. You guys know how to find them. And on behalf of our friends at CME and Sean and Nick and indeed myself, I want to thank all of you for tuning in throughout 2018, making this show so much fun. You guys are the reason we do it, after all, with your questions, your comments, your insights, your live chats, your downloads, all the other stuff that you guys do. Keep it coming. And we'll see you back here for more TWIFO in 2019.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.